Now, let's take you around the country and check out the state of the real estate markets from over the weekend. And nationally, there were 1,320 auctions and the clearance rate 61.5%. Now, that's slightly more auctions in the past few weeks and the clearance rate is slightly down. In Sydney, 467 auctions, again, a bit higher than previous weeks. The clearance rate here, again, lower, 61.5%. In Melbourne, the same story, 527 auctions, higher than recent weeks. The clearance rate, 65.7%, just a touch lower. In Brisbane, 50 auctions, the clearance rate here 60%. In Adelaide, 37 auctions. The clearance rate, though, was still strong. You can see here 75.7%. Lastly, the ACT, 53 auctions and a good clearance rate of 73.6%. So let's bring in Angus Moore, economist with REA Group. Angus, clearances might be down, but it's quite clear it's who's buying right now that's becoming a little more interesting.
Yeah, I think that's right. We are actually seeing a bit more in terms of investors in the market at the moment. If we look at ABS data, the share of mortgages going to investors, so you look at all the mortgages issued in a month, what share of those were taken up by investors, sitting a little bit above a third at the moment nationally. It's as high as about 40% in New South Wales. So that's a bit higher than what we were seeing during the pandemic, and it's more like what we've seen kind of typically across history. That's a big change from the pandemic, though.
I get that. Okay, so let's go to this. But in history, when you go back, when that investor interest starts to tick up, what does that say about what the market does in the future? Is it generally a precursor for a fairly strong condition for the property markets?
Yeah, it's a great question. And, I think it depends on a lot of factors. Part of what we're seeing at the moment is just the fact that rental markets are really attractive for investors. Vacancy rates across the country are extremely low as 1.5% in most capital cities, or even lower in places like Adelaide and Perth, where they're sub 1%, which means you just have very low risk of your property sitting vacant. So that's quite attractive to investors. At the same time, we're seeing very brisk rent growth kind of right across the country, including increasingly in Sydney and Melbourne, which really wasn't the case over the past few years. To put that in some perspective, over the last year, median rents for units in Sydney and Melbourne are up nearly 20%. That's very brisk, and that's probably attractive to investors at the moment.
Okay, so then the second part about this is property developers. Now, developers, quite clearly, the odds are sort of coming back into their favour at the moment. However, they've been way against them. The cost of building through the roof. Trying to get builders, again, very, very difficult. Then you've got interest rates rising and then questionable property markets. But with rents now starting to rise, that's starting to tip the balance, the equation back in favour of those developers to come out and to start considering building.
Yeah, certainly that's the hope. We haven't seen it to date. We had data out on building approvals last week, and it showed that building approvals remain pretty low at the moment. They were up a little bit in trend terms for apartments, not a lot, and I wouldn't hang my hat on it too much. But, if you look at the broader sweep, they are sitting very low. And approvals for detached houses are extremely low at the moment, as low as they've been in a decade. So we're not seeing that yet. And a big part of the reason we're not is just interest rates.
But that's only exacerbating the problem that's to come down the track, because you've still got migration rising in Australia. You've still got the lack of building taking place. And so the equation is rents are rising. They'll continue to rise, which again will tip the odds in favour of these investors who are obviously smelling the breeze, got the finger in the air, and it's now saying, well, now is the time to make a few of these bets.
Yeah, exactly right. We talk a lot about how fundamentally the only way to improve housing affordability, be that for purchasers, be that for renters, is building more homes. The only way to increase the rental stock is to increase the number of homes as well. It's very hard to swap homes from being owner-occupied into the rental market. On net, that doesn't happen very much. The only way we increase how many rentals there are is by building more. To date, we haven't been seeing that, but increasingly with the conditions that we're seeing and the fact that interest rates perhaps look like we might have reached the peak, that's going to start to make that a bit more attractive, hopefully, over the next 12 to 18 months.
And that equation is the same equation that every homeowner makes themselves about whether they should rent or whether they should buy a home if they can get the deposit, if they can afford those interest rates. That's the key.
Exactly right. That kind of margin between renting and buying is a really important one for a first home buyer, though, for many, the actual balance between your mortgage and your rent may not be the constraint. It is for some, and, we did see that during the pandemic when interest rates fell by a lot. We did see a lot of first-home buyers. 2021 was one of the busiest years we've had for first-home buyers in 2 decades, since 2008. So it did make a big difference. But of course, that's not true for everyone. For many people, it's the deposit that's the constraint. It is, particularly in places like Sydney, very hard to save that 20% deposit.
Angus, always good to have you in the program. Many thanks for your time today.